In this video, we are going to chat all things mortgages. What do you need for an investment mortgage and how to get started? Hey team, if we've not met before, I am Katie, founder of KO Estates, helping investors on their property journey. Now, something a lot of people ask me is what's the difference between a regular mortgage for my personal house and an investment mortgage? And I'm like, whoa, they are completely different things. So I wanted to use this time to create a video to explain exactly what an investment mortgage is, why they're different, and the criteria that you'll typically need in order to get one. An investment mortgage works in a slightly different way. There's different requirements because banks see it as a different type of risk. So there are different products available and means that we need slightly different things in order to apply. When it comes to investment mortgages, there are different kinds. You've obviously got bridging, which is more suitable for a flip project where you need a short-term loan. You've got buy-to-let mortgages, which is probably the most common if you are buying a property to then rent it out. You have other specialist lending products as well for HMOs, portfolios, serviced accommodation and things like that. For this video, let's just talk about buy-to-lets because this is the vanilla, what most people will be using to get started on their investment journey. Now, for a typical buy-to-let investment mortgage, unlike a residential mortgage where a mortgage is based off your income and how much you earn, buy-to-lets aren't as worried about that because typically the rental income should pay for the mortgage. So banks are less worried about that. The only requirement when it comes to your personal income is that you at least earn $25,000 a year. Now, if there's two people on the mortgage, that means just between you need to be earning $25,000 per year. Now, I want to bust a little myth on this one as well because so many people say, oh, but I can't get a buy-to-let mortgage without owning my own property. And that's a complete lie. There are so many different products available for you if you don't own another home. Now, I work with so many clients in London, for example, where typically people don't really buy. It's a very much a rental market, but those clients are renting in London, still want to put their money to use. So they are looking to buy their first property, but instead they want it to be an investment property because they like renting, it gives them the flexibility. And a lot of them were worried that that would cause them issues. But from my experience working with clients, there are so many different mortgage lenders out there that have no problem with this because they understand that is the rental market. That's the way the world's moving. A lot of people are moving towards renting more. So from my experience, it has not been an issue at all. So if you're worried about that one, don't worry at all. Okay, another important one to note is that the main difference between a residential mortgage and a buy-to-let mortgage is that typically you need to put a lot more down on a buy-to-let mortgage. I think now on residential properties you can put as low as like 5% down, which is amazing, but in the investment world it does not work like that. And typically the minimum you'd have to put down is 25%. Now, with all the market mortgage changes and the wild west out there, it's actually looking more like 30%. I would make sure you have at least a 30% deposit in order for you to get access to most products out there. So aim for 30%. You will need a 30% deposit to put down on your investment property. And the final point on that really is the minimum loan size. Now, typically the minimum I've ever seen is about 60K. So with a 30% deposit down, that would mean your property price of 90K. So typically that is the minimum loan size that I have seen. So that is something to be aware of if you're looking at the cheaper end of the market of the products. If a property is too cheap, lenders don't really like lending on it. They see it as high risk. It's not really worth their time. So the minimum I have seen is about 60K. So again, with your deposit, that's probably going to be about a £90,000 property for the minimum deposit required. When it comes to mortgages, lending, all that jazz, I am no expert. I'm not a mortgage broker. This is just from my experience with myself, experience with clients, and going through this process again and again and again. And what I can tell you is that every single person's requirements are so different, and it's based on your income, where you work, what you do, and all your credit history and everything around that. So there's no flat rule. Those kind of headlines that I've mentioned there are just like the typical requirements. Anything outside that is going to be quite specialist lending and a lot more difficult to do. But if you are hitting the 25k per year and 30% deposit, there will be a lot of options out there for you. Again, it will all come down to your personal circumstances. So my biggest piece of advice would just start having that conversation with a mortgage broker. Have a really great mortgage broker on your side, on your team, and they will help you navigate the entire market and find you the best product for you. I've worked with my mortgage broker who has been incredible. So if you do want any more details on the one I use and use them yourself, make sure to use all the links below. You're more than welcome to use my team because they have been incredible for me. But yeah, make sure you have a killer broker on your hands who's going to help you navigate this crazy market. There's not that many requirements, but it is a very different world to the residential world. I hope that helps, and keep me posted how you get on your investment journey. I'll catch you on the next video.